Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Good afternoon, welcome to the COB. I'm Sue Lannon. Now, it was a pretty rallying session today. Let's have a look. The CBO 200 was higher and the ASX 200 also had a good day, although it did come off its highs, rose about 0.4% to 9,052. That's with the prices just settling. We actually had most sectors were in the green, doing well today, IT stocks. We also had banks doing well. Also, we did see a bit of a sell-off of the rare earth stocks. Been lots of focus on those, of course, so some profit taking there. Now, as I said, the share market did rally on hopes of a US rate cut, but let's look at the themes for the day. And the rate cut bets are really big. The US Federal Reserve meets later this week. Expectations of a rate cut. Now, one of the things that investors are watching is the latest consumer inflation figures that came out on Friday in the US. Now, they were delayed. There was a small rise in headline inflation, so annual inflation is around 3% over the year, which is at the top of the Fed's target range, but could have been worse. Core inflation did fall slightly. Now, remembering RBA meets next week, and all eyes are on this week's consumer inflation data from the ABS. We have seen the unemployment rate rise, so I guess the Reserve Bank could go either way. And tariff tremors, will there or will there not be a trade deal this week? We've had lots of false starts. US President Trump meets Chinese President Xi Jinping in South Korea. So US and China, some good news overnight which boosted the markets. US and China have agreed to the framework of a potential trade deal with the US Treasury Secretary Scott Bessent saying he expects China to delay export curbs on rare earths. Now, another big news today was C-suite changes, a shock departure from Nuix. It tanked after announcing that the chief executive, Jonathan Rubinstein, would step down next week after 4 years in the top job. Nuix shares slumped as much as 15%. Let's take a look at the sectors of the day. Banks did well. They helped drive the market. The Commonwealth Bank put on 0.3%, Westpac 0.5%, the NAB rose 0.6%, ANZ up about 1/3%, and Macquarie just rose slightly. Let's have a look at gold stocks now. A bit of a mixed performance. Northern Star and Evolution Mining gained, but Newmont, Ramelius Resources and Genesis Minerals fell. Now, Ramelius fell because of a big drop in production over the latest quarter. In fact, its production's been going down since at least the December quarter. Let's have a look at some of the top corporate stories today. Rio Tinto and a Chinese state company have launched a trial of battery swap electric haul truck technology. That's at the Oyu Tolgoi copper mine in Mongolia. And Worley Parsons share price increased. That's after it was awarded a contract from Rio in its Pilbara operations. Copper miner Sandfire Resources reaffirmed its 2026 production guidance. It saw copper production rise 5% over the first quarter of the financial year. Underlying earnings were at $137 million over the September quarter, and the group has cut its debt by half to $62 million. Sandfire also reviewing a project in the US with results from a feasibility study expected this quarter. Now, as I mentioned, Ramelius Resources says gold production dropped over the September quarter. The gold miner producing just over 55,000 ounces of gold. That's down 25% from the June quarter. And as I mentioned, output in fact fell over the December quarter as well, when the company mined more than 85,000 ounces of gold. And another big story today, Netwealth has asked the federal government for assistance to repay nearly 1,100 customers who lost just over $100 million in the collapse of the First Guardian Retirement Investment Scheme. The company says it believes the scheme and the manager, Falcon Capital, engaged in fraudulent conduct. It says it believes sufficient evidence exists to establish that losses arose from fraud and the legal requirements for assistance have been met. Now, of course, the corporate regulator is investigating companies involved in the collapse of First Guardian, including Netwealth. ASIC is suing equity trustees over the collapse. Well, for more on the market action, welcome to the COB, Josh Barker from Barker Wealth. Now, we did see a rally today, so investors hopeful of rate cuts from the Fed and a trade deal.
Yeah, not much to complain about. We've got the Dow breaking out to all-time highs and we're sort of following that. The ASX 200 has really been a magnet around that 9,000 mark. I don't think it's necessarily come as resistance. Not necessarily support, it's just sort of hovering around those levels. There's a lot of positives to take. You know, we're starting to see, I wouldn't even call it a slowdown in the economic figures, but a slight miss in expectations in a couple of little areas. But these are on, really strong numbers. So we're just seeing a slight miss on a few of the economic data points, which means that we've also got that backup from central banks such as the Fed and the exact same story here locally, with a lot of room to cut or room to cut more quickly. So that's coming in and just supporting the market. So I don't, really see anything that's going to throw anything, that the market's not aware of and not really drive it higher. Obviously, we've got Trump, which is always the wild card.
Yes, always the wild card. Do you think this trade deal will hold? The US Treasury Secretary Scott Bessent sounded pretty optimistic. I guess it's fingers crossed. Yeah,
in some way, shape or form. Whether it's delayed a week or two, whether something else happens and then it gets sorted. We all know that these tariffs and things like that are temporary. So, it is focused on the economy whilst the political landscape sort of sorts itself out, which we're confident it will. So, I think that, the economy is still looking strong. The Fed and here locally have got room to cut to support that economy even further. None of those figures are really getting into alarming territory right now. So, I think it's onwards and upwards for all markets.
We saw oil and the Aussie dollar have a good day on that optimism about US trade deal. Yeah,
exactly. So, the commodities are moving around a fair bit. We had an update from Sandfire today. Copper, all but at all-time highs at the moment, which is, the barometer for the broader health of the economy. So that's still continuing on to do well. And then, China's really starting to open back up and, pending the current talks. I think it's starting to stand on its own feet, which again supports a lot of the Aussie mining companies and a lot of those earnings coming through. So, I don't see too much of the market that's in dire straits, but there's a few little pockets of opportunities here and there, that's for sure.
And investors took profit today in the rare earth miners. Of course, we're waiting to see whether curbs on exports of rare earths from China will be delayed.
Yeah.
And they've had a huge run-up because of that critical minerals deal with the US.
I suspect it's a pretty good move to take a lot of those profits, whether it does continue on. Like I said, with the tariffs, it'll be temporary, and I think that sidestep will also be temporary. So, they'll probably come down and settle and, go back on their long-term trend, which is, it's still to the upside, but it really exploded it up in the short term with some policies anyway.
And Ramelius Resources, that was a big fall in production, and production's been falling, in fact, all year.
Yeah, it's interesting. Like, obviously gold's had a stellar run up. We did start to see a little bit of wobble in that last week. It's the old sort of adage about the taxi driver telling you to go buy stocks if everyone's lining up at the gold store now. It's probably already soaked in. So that's sort of what I'm seeing in that area of the market, but not an area that we're involved in at the moment.
And we also saw Nuix tank today. Of course, this company's had a lot of problems, a lot of regulatory issues. This chief executive, Jonathan Rubinstein, came in to sort of sort it out, but now he's leaving.
The company has had a wild ride. It's been a really interesting story since it listed on the market. Went from a hero to a zero, and it sort of looked like it was coming back and standing on its own feet. But this is definitely a warning sign. For my mind, it's one of those ones that's never really been investment grade, so it'd still be a void. And times like this sort of reiterate that anyway.
Now, stocks you do like are real estate stocks. We did see the real estate index rise today, so help propel the market higher. So you are seeing a possible turnaround.
Yeah, look, it's there's like I said, we've got the market at 9,000. You've got to try and find some value where you can, because there are a few things that are overvalued. The financials are running red hot on that rate cut expectations. So, that's really supporting a lot of the market. I would expect some of those building supply companies to come back into favour. James Hardie was really popular in the news today. CEO coming out and saying that he's looking to restore investor faith after he essentially railroaded a merger. That is, I guess, tipped to be good for the company, but stock sold off quite aggressively on that news. There's a few names in that space. You've got Reliance Worldwide, which is involved in the plumbing sort of underneath the house, and you've got your sort of more exterior plumbing works with something like a Reece. And then obviously James Hardie is gone into that US space. But it's a sector that I'm probably just keeping my eye on for the time being, not necessarily running into, because it is down quite a bit and it's had a lot of weakness and justified weakness. And it's a lot of the US exposure that these companies have got. We're all aware of the housing crisis that we've got here locally, but in the US it's been a lot slower, and companies like Reece, for example, expect that to continue for another 12 to 18 months at the very least. But then they are investing really strongly. So, for example, Reece is off about 50% in the share price. Its revenues are flat, but its earnings have declined by about 30%. So it's had a squeeze in margins. Reason for that is they've been opening up stores and they've rebranded in the US. So they're focused on growth whilst the sort of broader economy for them is quite tough. So they've opened, I think, 15 new stores in Australia and then another 23 in the US. So that's why the margins are getting squeezed, and it's somewhat justifiable. But I think it's a good reason for a company to be spending a little bit more than they were the previous year, and that's all it really is.
And what about if there's a rate cut here?
Yeah.
Probably boost house prices again. So is that a good outlook for James Hardie and other companies?
Yeah, exactly. So both here in Australia, look, the rate cut, obviously we know, supports the Australian market. Has a little bit of a different effect in the US, where the rate cut sort of helps consumers, which are spending the money. It doesn't have such a strong housing market like we do here, where we just know it kind of goes up over time. It is very much more based on the consumer, and the spending around builds and renovation is very, very cyclical over there, whereas Australia has the equity, I guess, to be able to constantly support that. A lot of migration as well, and undersupply of builders helps. But yeah, very different market in the US. But yes, those two inputs do lead to positives for both the Aussie and the US segments in those businesses. So definitely something to keep an eye on. If you're looking for things that aren't at those 52-week highs like a lot of the market is, you're not going to have a huge growth, you're not going to have a huge dividend, but it's something that you can put in the portfolio with a fair bit of confidence that it's just going to grind higher over time.
Okay, Josh Barker from Barker Wealth, thank you so much
Thanks
for joining
having me.
us.
Appreciate it.
Let's have a look now at the stock of the day. It was Netwealth. Nadine Blaney spoke with our experts, David Lane from All Ord Minute and Andrew Coleman from Team Invest.
We've actually got a sell recommendation on Netwealth. Great business, and we think that it is a growing business. They had net inflows of about 4 billion in the last quarter. Although interestingly, we did notice that the last 3 months of the quarter, the latter part of the 3 months, they had a bit of a slowdown in inflows. And as you mentioned, they had that exposure to First Guardian, so they lodged the application for financial support from the government.
If you think about it, Netwealth's got over 100 billion roughly on their platform. If they are now at risk that any time an investor loses money who uses their platform, for the value of any losses suffered, it doesn't take a big percentage drop in the market or in the performance of something like a fraud to wipe out all of their profits, not just now, but for multiple generations. And if you sort of think about that, to me, that now places it from being a wonderful, stable business into the kind of business that has a sword of Damocles existential risk guillotine hanging over the neck of that company as an investor. And at that point, I switch from being very bullish about the company to thinking, let someone else take that risk, because I like to invest like a pleasure cruise, being able to enjoy the ride, sit back, relax, and earn lots of money. I don't like to be constantly worrying that we're about to hit the iceberg.
Now let's have a look at the market leaders today. The stocks that did the best on the ASX 200, the insurance broker AUB rose 12%. Then the ASX put it in a trading halt. Steadfast up more than 6%. Bevel up 5%. Life360, the apps company, up 4.5%. And Megaport, data centres operator, also rose. Turning to the laggards now. We've heard about Ramulus Resources, that big drop in production. It lost nearly 7% of its value today. Rare Earths, as we mentioned, was sold off. Iluka Resources down 6.5%. Viva Energy on a drop in sales was down a drop in earnings, down 4.7%. The uranium firm Deep Yellow also fell, and Hyperion X also lost ground. Let's have a look at the small caps. Wicker rose 25%, Coast Entertainment up 14%, Elside up 14%, and Nido Education also gained ground. Looking at the small cap laggards, Felix Gold lost 25% of its value. Latrobe Magnesium, one of the winners from the US critical minerals deal, was one of the critical minerals companies where investors took profits. It fell 22%. Bougainville Copper lost nearly 17%, and Viridis Mining also lost ground. Let's have a look what's happening overnight. The Reserve Bank Governor Michelle Bullock will speak tomorrow, and US durable goods orders are out for September. They're tipped to lift about 1/3%. Looking at tomorrow, we've got a whole load of AGMs on still. Austel, AGM, CSL and PolyNovel. For the September quarter, more quarterly reports are out. West Gold Resources, Resolute Mining and Liontown Resources. Now let's check a final check of the markets. The CBOE 200 is higher, and the ASX 200 rose 0.4% to 9,056. Thanks for watching. You've been watching the COB. Join us again tomorrow. Have a good evening.